Alright guys, in this video I'm going to go into detail on how you can identify when heavy order flow is entering the market and sort of how to draw implications based off that type of behavior in the market and how that affects the levels that you set your price distinctions. So right here I'm going to mark off this level here where the market structure in Bitcoin just really started to change around. A lot of this was mediated by the words and actions of the Fed, with their signaling their intentions to raise interest rates. But ultimately, whether you're identifying the break of market structure here or the break of market structure here, right, price violates those levels basically within the same 3 days or so. But ultimately, what I want to focus on here is I have these supports turned resistance marked off. And in this, we get this heavy order flow, right, as the market turns around. And price comes down, it bases off these support levels here. But it never really gets back up to these support, if you're looking for support turn resistance in demanding that rigid, deep retracement off the market, you never get that. And that has to do with the heaviness of the order flow. Right, you see the same thing here. Price breaks this support, comes down to this volume base here, bases off that level, and it does mount a little bit of a rally here, but ultimately never reaches this resistance up here. And then, of course, comes down, hangs out here, breaks down, bounces a little bit, but never hits this resistance up here. So that's what I mean by the heaviness of the order flow. And what I want to do is I want to point out how you can mark off daily highs after you get these bounces, like this one right here, this one right here, this one right here. And these are levels where price comes to support, bounces in the context of this downtrend, and then you see this price stall, and you get one last throw over above these daily highs here, 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 and then you get the continuation of trend. And this is a very clear liquidity graph in this downtrend. So we'll go down to the hourly chart. Might be able to see this better. And we'll go over to our first price distinction. So here we have this level here. And this price behavior right here is very, this is worth pointing out as well. On a separate note, you see this run down below these lows right here. Price comes up, closes back in the consolidation. You can mark off this intermediate time frame high right here. It's a classic swing failure pattern. When you see this and you see those, price reclose in this range, take out these highs. It's a pretty good indication that price is going to create this inside gap and run up, filling in this level right here. But ultimately, we have our daily high that we marked off previously, and we only know that level is operable once we see this low here getting violated. So price runs up impulsively, volatility slows down, then volatility picks up again. Right, it violates these short-term lows. You can see this a little bit more clearly as well if you went down to a 15-minute. But the idea is that the lower time frames are starting to realign with the higher time frames in this scenario, or at least the daily trend. So you get this micro break of structure on the 15-minute, and then price volatility is expanding. Price runs back above these daily highs right here. There's your entry right there. Very little drawdown. Doesn't play out immediately. I mean, it actually does a retest right here, but you're really never underwater during this trade. Very efficient price movement, and it oscillates around this region and then breaks down. Doesn't really even stop at support. Goes screaming down here. It's a big liquidation movement. Then bases off this level here. We see our next see prices sort of like mounting a rally, breaking structure on the low time frames, but the heaviness of the order flow on the daily is so strong that it never reaches this level up here. You see this, price starts violating the lows on the low time frame. Then we see this one last push up above these daily highs, and price barely spends any time above this level. A very, very efficient trade right there. Comes down, runs right back to the support, bases off this level, hangs out there, ultimately breaks. Then we see it come down, mount a little bit of a pitiful dead cat bounce, and then you see the same type of behavior. But actually, this would not be the best example because you don't have the break of the low time frame lows, so you don't have that microstructure break. So there's really no indication to know that this is going to happen. So it's not really as tradable as the two previous that we identified. So I wouldn't. There's just no way to trade this. So it's not the best example. Let's see. We have this level here. Let's see if this is a daily high. Okay, so we have we have this daily high right here, and then this is a good example of the fractal nature of price action. So not only do you have a throwover above this high with this price movement here, but you're also in the throwover of this high as well, moving up into this region. So what we have here is we have, looking downward a little bit, we have a market structure break right here, where if you're, and of course, from what we've seen in the past 2 months, right, everyone was probably looking at this. It's like this is just another lower high in a series of lower highs, right? Everybody's looking at this as a confirmed lower high, but then until we get the February 4th candle, right, price moves very impulsively, breaks these highs, breaks structure, and when you see this happen, a lot of times the market will flip around very quickly, right? And that the heaviness of the order flow you saw coming down here will bounce in the other direction, and price will move very, very aggressively counter trend. And there's a lot of price distinctions in this area of the market over here, right? Maybe if you're looking at here or up here, right? But price just sort of steamrolls through those, reaching for these highs, right? That's a classic market structure break and inside gap. Anyway, we have these historical highs. Price runs up above them, starts to pause. You get your last final throw over above this level. Price comes crashing down. So let's go down to the hourly time frame, see what we can see there. All right, so at this level, price reaches up for these daily highs. You can see that price sort of stalls at this level. Not ultimately, it makes one push higher, and to put in your apex high, your ultimately your swing high. And then it comes down, violates these lows. That's when this pattern starts to break down. You start to get confirmation that this is in fact the swing high, right? Reacts at a historical level, throws over, comes down, violates these lows, and then bases off this support here. So I actually took a couple live trades off this level. You can go back in the channel and look at some of the live demo trades I posted, but I took along here and, of course, managed it a little bit up the next day or so. But ultimately, price comes down to this level, puts in a little bit of a low time frame uptrend. We could probably see it better if we go down to a 15-minute. Yeah, here we go. So it comes down to this level. We see this nice orderly 15-minute uptrend with efficient price movement. Again, this is a 15-minute chart with this orderly movement. This is very low volatility price action. But again, we got to remember we're at a high time frame daily level, right? In the context of, historically in the last 2 months, we've seen some pretty heavy sell side order flow. So we're back at those highs, and we see what we see here is we see volatility start to pick up again at that level, right? And it starts picking up right here, breaking these lows, right? So lower lows, higher highs, lower lows. Typically, that's what you'll see if you're looking at the low time frames when volatility starts to pick up, right? You'll see this lower low, higher high, lower low signature, right? And even though the market started to break structure here, violating this level, if you tried to, enter the market quickly after this level was broken, you probably got stopped out on this throw over. And that's kind of illustrates the point that if we're at a level where we can reasonably expect volatility to pick up, we don't want to play so close to the market because we can be right in our directional bias, but ultimately get stopped out. So, it's better in those situations to be a little bit patient, let the market play out and kind of flush people out on both sides of the market, and then step in after the whipsaw and price behavior. But or you could enter here, right? Because with the context of the historical price action at this level, we got the swing high, and then the previous daily high we showed on the left hand side of the chart. Because the odds are that if you see this break of structure here, that if price comes up, does this throw over this over the swings, and you get your liquidity run. This is the daily stop run, right? So the odds of it running up to that level and then running higher without at least giving a little bit of a few retracements in there for you to manage the equity on your account is pretty low. So that would be a really great entry. It comes down, sets in that lower low, gives you another layer of confirmation. And yeah, it comes up a little bit, hangs out around this level, but ultimately that was your trade right there.